I would like to welcome everyone to this keynote exchange of the workshop titled Debt Trails, Mapping Relations of Debt and Credit from Everyday Actors to Global Credit Markets. And I'm very happy to welcome our two keynote presenters who are going to engage in a discussion. So those of you who are here now, I just want to introduce them very briefly. So, at the bottom. So I would like to welcome McFall, who is the head of the Sociology Department of Open University, and she's also the editor-in-chief of the Journal of Cultural Economy. She has worked on various markets that I would like to highlight here: insurance market, credit checks, payday loans, and she has also written a number of books on these topics, including revising consumption and also edited a number of books, one of which is coming out this year, Markets and the Arts of Attachment. What I really like about her work is that she's not only looking at exchange in the narrow sense, but also has this broader approach of looking at the state and also how consumers are enrolled into the exchange. Then our other keynote presenter is Paul, who is an economic geographer. He's a reader at the Economic Geography Department of Durham University. And he has also worked extensively on financial markets. So he looked at saving and debt. So he looked at global finance from the point of view of everyday saving and debt in his book, The Everyday Life of Global Finance, and also the governance of the global financial crisis. In this other book, the book that, yes, it's also there, so you can see that it exists. And
it is real, it's not just a picture.
Real, yes.
It does exist.
There is a proof that it's not just a picture. And his more recent work focuses on alternative forms of finance like crowdfunding, ethical investment, and so on. So his work is more related to economic geography, but he also uses cultural economy framework. So he brings this everyday sort of angle into global financial flows, which I find very, very interesting. So I'm very happy to have both of you here, also because your work talks a similar set of concepts, but there are also differences in your approaches. So hopefully we will have a bit of both in the discussion. So just a bit on the structure of the discussion, I'm going to ask some questions from Lisa and Paul, and after their answers, we will have time for a few comments. So we will have time for one or two comments after each speech. But before we start, I would like to ask you to talk a bit about your current research. So shall we start with Paul?
Okay, thank you. Thanks to Linga and the organisers for the invitation to come along here. It's been a really interesting day, and I'm certainly not going to go home hungry. I'm thinking more today than I could ever possibly want to ask. Okay, one of the questions that a few of my colleagues have asked me is, how did you get from collateralized debt obligations to crowdfunding? What was going on there? Basically, when I was coming to the end of a project on liquidity lost, I kept coming across in various UK government departments crowdfunding being held out as a way of providing an alternative source of finance, particularly for startup businesses and small and medium-sized enterprises. And this got me interested in crowdfunding. The first paper to come out of that I've circulated, and it's forthcoming in Economic Geography, and any of you that are interested, I would welcome your comments, because it's a project that's very much ongoing. Some of the subsequent research I've done on crowdfunding, I've been doing with a collaborator from the University of Nottingham, Andrew Leyshon. Interestingly, Andrew Leyshon's entry point into crowdfunding is very different to mine, in the sense that it's come out of a project that he's been working on around the musical economy. And Andrew is very keen to tell me that all roads lead to the musical economy, in the sense that two reasons. First of all, that David Bowie was a keen securitiser of his back catalogue, and secondly, that Marillion, the pop group Marillion, were, according to Andrew at least, the very first artist to use crowdfunding as a source of resources to enable their production of a CD that they were trying to produce at the time, mobilising their fan base and so on. So all roads lead to the musical economy. So what is crowdfunding? I'm going to be relatively brief here. Crowdfunding in the UK is growing very rapidly, as it is globally. So for example, annual growth rates in aggregate flows in crowdfunding averaged roughly 75%, that's year on year, between 2011 and 2013. In 2014, they more than double again. At present, crowdfunding, the aggregate flows in crowdfunding economy are around about 3 billion, which is relatively small, so we're talking sort of 3 to 4% equivalent of retail bank lending. So a small sector that's rapidly growing. Generic definitions of crowdfunding will typically emphasise the way in which monetary resources are provided by large numbers of individuals, the crowd, right? Okay, and these are aggregated and distributed by online platforms to a range of individuals and institutions. What this generic definition obscures is the diversity within the digital space economy of crowdfunding. The slide here is a typology that Andrew and I have been working on and have updated at various points as new bits of the crowdfunding have developed, so to speak. So in crowdfunding we've got the kind of donation circuit, resembling the kind of symbolic compensation of charity and gift giving. We've got rewards crowdfunding, circuit here, which is probably the most recognised globally. Here it kind of resembles the making of early payments by way of pre-ordering retail products. Those providing rewards crowdfunding often get some kind of markers of prestige of some kind, so hence the kind of rewards in the kind of fan economies of Marillion, for example, right? These two, the top two there, have been especially associated and have become a very well-established source of funding for artists, performers, community projects, musicians, filmmakers, and increasingly computer game makers, interestingly. But crowdfunding also includes my bottom four circuits here, which are both monetary and financial in character. Okay, so we've got equity circuits, fixed income circuits, peer-to-peer lending circuits, which split out again into business lending and domestic lending, and also the most recent and at present rapidly growing crowdfunding circuit, which is the property circuit. And again, that breaks out into two, where you've got commercial and residential property. All of these four financial circuits then feature financial instruments in one way or another that are crucial to constituting the debt relations that they entail, okay? I'm not going to say any more, really, about crowdfunding, other than to try and offer some reflections that kind of bring this work into conversation with the theme of the workshop. And I think, possibly, crowdfunding maybe could have kind of three insights for us as we try and think about debt trails. The first is that whilst this is a complex and heterogeneous set of debt relations, okay, so you've got debt relations here between all of these on one side and all of these on the other, very heterogeneous, all monetary in form, but different kinds of debt relations, right? Okay. So whilst you've got that heterogeneity, I think it also reminds us that the relational geographies of debt trails are a complex mix of monetary and morality planes, right? So for me, part of what's interesting about crowdfunding is that we've got this, in many ways, a kind of microcosm of debt relations that we find in many other domains, right? Okay. We've got secured and unsecured loans paying interest. We've got various fixed interest bond instruments, different maturities. We've got equity trading where capital is essentially swapped for ownership rights and claims on future profits. In donations and rewards circuits, we've got non-monetary relations. Non-monetary relations binding charities, community groups, artists and the like to so-called supporters, backers, fans, enthusiasts. And I think it's tempting perhaps to see those kind of relations between supporters, backers, charities, artists, community groups, perhaps not seeing them as debt relations. But so there's some interesting work, particularly looking at the kind of pressures and obligations that artists feel once they've been successful in getting this crowdfunding. And they do feel strong moral obligations to their backers. Okay, strong moral obligations to work through and to repay, if not in a monetary form. They're acutely aware of the reputational risks of not delivering on their projects, and they do indeed have to devote considerable labour to making good on those obligations and their promises. So if that's the first insight, maybe the second one is that crowdfunding, by its very nature, shows us that basically mass market debt relations are possible without banks. Okay? So there's no fractional reserve lending, there's no debt leverage, there's no maturity mismatches. Okay? The platforms here that are acting as the intermediaries that aggregate and distribute these funds, they are not banks. Okay, and I think that's important. Indeed, some of them actually trade on the idea of bank bashing, particularly in the wake of the crisis. Come to us, we're not banks, right? Come to us, help us to intermediate a new economy, we're not banks. Yet, even in crowdfunding and in this absence of banks, I think a critical analysis of this would draw significant analytical attention to what the platforms are actually doing, right, as intermediaries. They're fee earning, right? They cultivate value in this space. They do so essentially through rent, right? By charging fees for their aggregation and distribution of funds. They're also disruptive business models, okay? As disruptive business models, bond models, they're backed by venture capital, they're backed by equity investors, right? They're businesses here, right? So although they're not banks, they're intermediaries, they're fee earning, even in the donation and rewards circuits. Right? So if you donate to a charity via a crowdfunding platform, the crowdfunding platform takes its cut. Okay. The platforms also, interestingly, cluster in key centres. So there's something of a platform cluster in East London in the so-called Silicon Roundabout on the edge of the City of London. And we've also got, significantly then, two debt trails here. We've got the debt trail between your charities, your supporters, your backers, your communities, the artists, the enthusiasts, and so on, right? There's that debt trail to crowdfunding, but there's another debt trail, a debt trail that runs from the platforms through the venture capitalists, increasingly to them as they prepare for initial public offerings and so on. So two trails, a complex intersection of two trails, not one. Which brings me perhaps to the final thing that I want to say here, and in terms of the relationship between this work and debt trails, and that is that if we're trying to map a debt trail, we should be cautious of trying to map in a way that fixes a debt trail, right? These particular debt trails here are rapidly changing, right? They're dynamic. So I'm encouraging us to think about debt trails in a dynamic way. What we've seen in the last couple of years in particular are platforms seeking out inputs, monies from institutional investors. This is particularly the case in the peer-to-peer lending circuits and also in the property circuits. Right? So this becomes not about a debt relation between two peers, but a debt relation that is mediated by the platform and relies on resources from institutional investors, right? Changing the nature of the debt trail itself. We've also seen, again in recent years, various government policies, this is central and local government, the London Mayor Office is particularly keen on this, where government spending, public money, is channeled through the platforms. Okay, so a number of platforms, most notably Funding Circle, a large number of the projects funded through Funding Circle, which is a business lending platform, combine little elements, little packages of government public money alongside the investments of the crowd. Okay, so a dynamic debt trail. Enough for now. You read my clever? It's all been hearing.
Where is the present value on?
Yeah, full screen in the bottom right hand corner.
This one?
There. And then you play it. Or the arrow. And then the arrow going to the right.
Okay, cool. Right. This was kind of risky. I like to play it dangerously because Prezi lets me down at least as often as it doesn't. So I just want to make a few brief comments about the connections between work that always looked to the past and the work that I'm doing now, which is involving me in kind of making a movement from only looking at dead people and the traces they left behind to trying to understand what Paul described to me a couple of days ago as proximities of near and far in digital terms, and thinking that through in terms of relationships of having. Now, last summer I was asked to speak at the Image of Finance launch in Manchester, and this was one of the images that they used. And I talked about it in terms of, I wanted to change one letter. The market will save us to the market will have us, in order to kind of think about something that just bothers me. The market will have us. And you know, if you're interested in this, you can read the paper. The paper is in the book that Lena very kindly name-checked that's coming out this year. It's joint with me and Joe DeVille, and it's called The Market Will Have You. So, how did you get into this digital problem from this area? I was delighted this morning to hear Judith talk about Provident Hungary and discover that they had a connection to Provident UK. This is Provident UK in the early 1970s, and this chap here is the agent, and I've spent a great deal of the last 10 years trying to figure out what exactly these human agents were doing. And one of the things that they were doing was having their market. And they were having this. I was chatting to Samuel just after lunch about the extent to which weird things happened in this industry. So in the 1950s, this is doorstep lending. In the 1950s, when affluence starts to build in the UK, you get this weird thing happening where customers are continuing to borrow from agents even when they don't need the money because they want to give the agents the business. That doesn't make, a lot of people throughout today have been talking about situated rationalities and creative rationalities and all sorts of funky things people do when they make borrowing decisions. That to me just didn't make any kind of sense. But more recently, I've got into this kind of world. This is a quote from the fictional novel Headless. Anyone who's interested in this project, this is a novel by someone called KD, which involves, what's his name? He's a colleague of yours, Susie, who did the book. Angus Cameron, yeah. It's a very weird offshore finance, fictional crime story, weird world, but it's got this quote in it. And this notion of digital doubles. This claim, epistemological chutzpah, is the claim that we are now in a world where digital techniques allow us to forget about quantitative and qualitative trade-off. We can kind of really know you, get right inside you, have your spirit and have your soul. And the project that Susie and I are working on now is trying to look at this in the area of health insurance. Apple Watch. This is very important to me to have an Apple Watch, both because it's part of the project, it's measuring every time I do this, and making me feel like I'm really fit, but also because I really like Apple stuff. And I love that, that tension between actually, in the end, why we want stuff on the market. Who knows? I mean, why don't I can't really explain this rationally. I know it's not because Apple are evil.
They're quite evil on tax issues, they're quite evil.
Yeah, no, I didn't say they weren't evil. I said, I don't want it because of their evilness or their manipulative power. I do not feel manipulated by Apple. So, this brings us to this kind of world. This is Oscar Health Insurance, a unicorn startup in New York, who are trying to build a business in what is a market that is controlled by mega monolithic, massive companies. Partly through this business, they have an app running which you can just about see, where you can get Amazon vouchers if you move enough. So your health insurance premiums will go down if you can satisfy them that you're doing enough of this. That's the theory. We're not there yet. They aren't actually doing it. They're saying they're giving you Amazon vouchers rather than a reduction in price of health insurance. So my interest is in all these different kinds of having the markets do. Relational work. Viviana Zelizer would say that the agents were doing this special thing called relational work that brought together the world of economy with the world of culture. I have various problems with that. She's very clever in the way that she explains how that works. But I can't find the pure sphere. I've never have been able to find the pure sphere of economy or the pure sphere of culture. That's what Cultural Economy, the journal, is all about. It's about those mixes. I'm more particularly grabbing the point from Gabrielle Tard, the idea of having as identity. We are who we are because of what we have. Not because of what we be, essentially, but because of what we have. This is a point that the American pragmatists took out of Darwinian thinking in terms of organisms evolve because they must struggle. They don't struggle because they must evolve. So they have to survive by forming relationships with other organisms and with other objects in the world. And that is how they become what they are. You know, I'm conscious of time, so I'm not going to say too much about knitting, but we heard a wonderful paper earlier on this morning that goes to that idea that however glamorous high finance is deeply knitted into the domestic worlds that we all live in, and even the, what did you call them, Leonard? The affluent middle?
Mass affluent.
Mass affluent.
Mass affluent. Mass affluent.
The mass affluent. The mass affluent. That kind of everyday experience of finance. Finance is what everyone needs in order to survive, and that how those relationships work at every level. It astonishes me that it's only the high level that really, for a long time, got much attention. And I'm absolutely delighted to be here in terms of just hearing how much work that's going on to change that, because I didn't know. Yeah, I've kind of made this point. Relations are what give you this kind of fixed, stable, identifiable, classifiable sense of you as a thing, or it as a thing. This slide just goes to the first question that you're going to ask us. So we can sit down now.
Thank you very much. So the first question that I'm going to ask, surprise, is, so I'm also paper starts with the idea that the global financial crisis was considered a big challenge for mainstream economics, and probably a big, like opportunity for social studies of finance and generally more social approaches to the economy. But if we look at the current developments, what we see is that economics is still the main framework to address economic issues. I mean, it got a bit revamped. Behavioral economics, they give them Nobel Prizes to show that yes, we really care about the other aspects of economics. And my first question is, why do you think that is the case? I mean, some people say that it's because economics is very simple, whereas what we do is really complex and very diverse, and nobody really understands what's going on. So why do you think? What's your opinion on that?
I wanted to start answering this by referring to a spat that would be familiar to anyone who lives in the UK but may not be familiar otherwise, which is kind of an interesting spat in the sense that it's rare for sociologists to receive this much attention in a national newspaper. This is Aditya Chakrabarty taking a pop at two particular constituencies of social science, specifically sociologists and political economists, for missing the opportunity presented by the crisis for alternative heterodox voices to get into the conversation. He accuses sociologists of being too busy studying craft beer and tanning salons to really have engaged with what was happening in something as significant as finance. He also accuses he is aware of the work in the social studies of finance, but he accuses it of being something like all about the engine and not the car or something like that. But basically it's too technocratic. So that kind of seems like a really difficult question to me. It goes directly to the heart of this workshop, the theme of this workshop. In terms of the fact that the kind of work that sociologists can do, I can speak better to what sociologists can do than political economists, isn't, for all sorts of reasons, very easily reinventable into a very quantitative, technocratic project of the type that, Aditya Chakrabarty has an economist training, well, kind of. He did PPE, of course, because that's what journalists who work at The Guardian tend to have done. His vision of what sociologists could and should do is about a kind of political intervention that is the type of political intervention that certain people with a certain attachment and persuasion to a slightly left-leaning, we do it in an old Labour kind of way and we can fix it this way if you just... It's very attached to the CREST project that some of you may have heard of a particular political economy of looking at the crisis, and that would be the way to do it. You introduce Minsky back into the economics syllable, you do some heterodox economics teaching, and the sociologists could help with that if they would just stop drinking craft beer. But I think he misses the point of the type of work that people who are doing here. It takes time, and it involves suspending judgment. It involves not knowing in advance of starting to do the thick empirical description what you're going to find. This is an unfair form of political economy, but I'm going to do it anyway. For me, a lot of the problem with political economy is that it does know the answers in advance. I know that a lot of my political economist friends know exactly what they're going to find when they start a project, because they find what they set out to do, which is a point I think you've also meant to be Paul.
Yeah. A friend of mine at a point in the mid-1990s used to talk about, she was an editor of a journal at the time, and she talked about the idea that what she received was a series of Gramscian sandwiches. And this was a paper that began with some Gramsci, had some empirics in the middle and returned to Gramsci at the end. So yeah, I share some of your concerns about political economy there. What I would say more broadly is that the likes of Chakrabarty, and probably where the question's trying to get at, the likes of Chakrabarty would like to see a kind of singular response from social science. that I don't think we're in a position to offer. Neither perhaps should we be seeking to offer. In my experience, particularly of the kinds of interdisciplinary workshops that we're in here, is that what the study of money and finance has to offer as an object, as an anchor point, is actually a productive set of tensions between different ways of coming at the problem. It doesn't lead to a singular answer. Chakrabarti would like a singular answer. We can't offer a singular answer. Okay. Equally, I do take to some degree some issue with the way that this problem is often, the way that this question is phrased, in the sense that it does give the impression that economics is singular, right, and that social science is too diverse, or too messing about with craft beer or whatever. When actually I think there's a slight problem there, in the sense that economics is much more diverse than we would give it credit for. One of the things, to some degree, one of the surprising, and this is my final point, one of the surprising things that I came across working on the liquidity loss book was that central bankers were quite happy to kind of work with a soggy conflation of Walter Bagehot, John Maynard Keynes, to some degree Hyman Minsky, to some degree Adam Smith, to some degree complex adaptive systems theory. Right? The economics of the crisis was not singular, right? It was multiple. In fact, the thing that I expected to find, which was behavioural economics at work, wasn't there at all. Right? So, the two things I'd say. The first would be, let's not cast economics as too singular in the first instance, because I think that would be to, in many ways, obscure the power of economics. Economics is broader than that, often works through kind of metaphors like liquidity. What does liquidity mean? It's not a kind of hard economic concept, right? And yet it had such traction for 12 months or so. That crisis was governed as a liquidity crisis, right? And apart from a few economists working at the Bank of International Settlements and an article in the FT, no one really ever stopped to ask what that meant. Right? So I think on the one hand we need to be really, really careful about how we understand economics and its power. On the other hand, I would say we shouldn't seek to be singular. Actually, what's interesting is the productive tensions.
Thank you. So we can take one or two comments from the audience, not questions. If you have some thoughts on this. If you don't, I do. So raise your hand if you want to. No? Okay. So what I was wondering, now that I asked the question, is that, yes, economics is not that singular as we usually think about it. Also, yeah, it's much more multiple, and there are sociological lines that are very singular. So if that would be the problem, they could perfectly just use one of these sociological research strands that are really very, same logic. If you set out to do something, you know exactly what you will find. So what I'm wondering is that maybe it's just the basic assumption about human beings that economics has that's so appealing, that they want money rather than, they want recognition or they want society to function, because there are plenty of sociological theories that start from that assumption, and then, the theory does the explanation. So maybe it's just this ontology that's appealing about economics in certain circles that are using this theory. So it's just an idea. Other comments? Yes?
Well, one of the answers I find when I teach a seminar, a tutorial for political economy, then all the students are very, very scared of economics, of the economics of it. And so I first kind of have to take a step back and say, okay, political economy, we explain sort of institutions, the economy, society, cultural, political economy. It's not only the economics makes itself very, very complicated and therefore excludes itself from a lot of people that don't really start engaging with it. It makes it sort of very complicated, but at the same time, the sort of truth and the idea of the economy, even though I agree that it's very multidisciplinary, but it has the sort of thing that only experts and knowledgeable people engage with, and which is why not that many people maybe like stay away from it, if that makes sense, and therefore it has this sort of great persistence in being able to explain the economy, and other people sort of shy away from it.
I would agree, but I mean, for me, one of the frustrations that I've had with this, the kind of social studies of finance project, and I'm thinking quite narrowly here, is that on the one hand, they've done an absolutely fantastic job at opening up economics. So both Callon and Mackenzie at various times you use terms like economics at large and in the wild, right? And economics here isn't just a body of knowledge, it's a set of techniques and it's a set of devices and so on. So in that sense, they've done a great job at kind of opening up how we might think about economics. But on the other hand, they then close it down. By kind of situating in relation to particular market experiments, particular laboratories that they can kind of, rather than trying to think about economics at large and in the wild, in the round, right? Okay, which would open up, to some degree, a recovery of a kind of older tradition of thinking about economics as kind of metaphor and so on, through like individual clusters work and all that kind of stuff. But also the degree to which how in popular culture, economy is so highly mediated. But how do we know economy, or not know it and feel confused by it? We know it through various media channels, right? Whether that, whatever that might be. And so, on the one hand, I'd like to think that social studies of finance might have something to add here, but I don't think it does unless it kind of embraces a broader kind of cultural economy project that would be more willing to think about the power of economics at large and in the wild beyond some kind of confine of the laboratory of the markets, I think.
Thank you. Okay, so my next question is that if you look at the social science research on financial markets, there is a shift from finance to debt. What do you think about that? What is at stake in this shift?
Okay, there is a shift, I think. I'm not making it to as many conferences as I like, but I see lots of calls for papers, lots of calls for contributions to special issues. So there is a shift in an academic agenda towards thinking about debt. I'm also old enough to remember that there was at one time a shift from money to finance, particularly in geography. And at one time there was also a shift from finance to financialization. So there is a sense in which this kind of comes with a history, so to speak, of a shifting agenda across the social sciences. Where does it come from? Would be a kind of question to ask. Multiple drivers, I think. Clearly there's a sense in which social science is kind of dragged on the coattails of governmental projects. So, we are at a moment where debt, particularly sovereign debt, is the governmental problem of the day, and we're kind of dragged on the coattails of that. So that's one driver. For the kind of group that we've got here, I think it's a relatively short step from some sets of writing saying we should think about consumer credit, not the financial markets out there. I think it's a relatively short step there to think about debt, and this workshop would seem to be a case in point. Also, something that's come up at various points today, there is a body of political economy work that is screaming loudly about the debt relation. Some of it wants to place the debt relation at the centre of capitalism, so Lazzarato's work and others. Equally, there's a kind of sense in which some of the sort of tail end of the literature on financialisation also wants to bring the debt relation central, so financialisation as a mode of accumulation by dispossession and all that kind of work. So various drivers that kind of propel something of a shift to debt in terms of an academic agenda. What's the payoff? Is there any benefit in that? I kind of like the way that thinking in terms of debt as opposed to finance might engender a return to thinking about multiplicities of these relations in the way that I'm kind of trying to play about with a little bit with the crowdfunding research. So, you know, the debt can take multiple forms. I think that's harder to think if we think through the category of the register of finance, right? So that's one thing. Where else does it take us? I think most ambitiously, it takes us towards a sense in which debt is not that which pollutes or infects or disrupts the social, but most ambitiously I think it takes us to a place where we might think about debt as being constitutive of the social, right? For someone like Lazzarato, that's debt as constitutive of the social understood as capitalism. There's other work that wants to think so. The Debt to Society book, whose name has gone completely out of my head. She's called Miranda Joseph, yeah. Miranda Joseph's work, where she wants to bring debt in its different ways. Okay, so that could be corporate debt, that could be debts to parents, there could be debts to your children in the future. She wants to bring that debt relation to the centre of an understanding of biopolitical power, right? Somewhat a different project. So I think most ambitiously it could do that kind of work in ways that the category of finance perhaps doesn't.
Yeah, I can come in and answer to that. Okay, so yes?
I wanted to ask Liz about changes in wages. So it's interesting what you're saying about as wages increase, there was still a sense of duty towards the doorstep earner. So particularly over the last 30 years, thinking of Lisa Atkin's work on financialisation of wages and the way in which wages become decoupled from actual labour and become directed towards servicing debt, and that being a fundamental shift. So again, whether that's something you looked at and how the wage form has changed.
It's not really. I've missed the last 30 years or so. not as a result of drinking too much craft beer. But I think that the project that I did on doorstep lending and doorstep saving went up to about 1980, and this project starts, the one we're working on now, starts now. So empirically I've skipped those years, and I did some work on Provident recently, which goes into the 1980s, and I discovered something about the Provident, which I'll try to answer this really quickly. But the Provident had this plan to become the People's Bank, and it was prevented after the secondary banking crisis of the 1970s. From doing so, the secondary banking crisis caused the Bank of England to tighten up regulation about naming, which fascinates me, and the Provident was not allowed to call itself a bank. Right? So it had this plan to go from becoming a poor man's banker to a mainstream lender. That didn't happen, in large part because of regulation. Now, because I'm not really sure what happened in the 80s and 90s, I can't really answer this authoritatively, but I wonder what would have happened. I don't know how much that caused it to flight, a flight to subprime, a real concentration of the type of the type of lending practices that Judith was talking about this morning to people who are really, they're not just unbanked, they're really precarious economies, because pre the 1980s, that's not where they were going. So, you know, there are things that are going on, which is the borrowers pre-1980 had bank accounts after 1980, and the ones that didn't become lenders like the Providence. Answer that target. That's not a particularly short answer. So I'm not sure precisely, and I know Lisa, but I'm not really sure precisely about her argument about wages, so it's not something I know a great deal about. But that 30 years about what happened to those lenders that forced the concentration, you may well know more about this than me, that forced the concentration into targeting subprime. And to what extent it might have happened anyway, because there's a weird cultural dynamic there. So pre-1980, those institutions that were selling to the poor, both savings and credit products, could label themselves as selling to the poor. But at the time when the poor become a bit more affluent, they don't really want the stigma of an institution that's got a heritage of selling to the working classes. They want mainstream provision. And the people who are getting poorer aren't getting provision really anywhere. So I'm not sure, it may have happened anyway for cultural reasons, because the more affluent parts of the working classes didn't want to be associated with those kinds of providers.
Thank you, Elise. So my next question is a methodological question. Seemingly, it's not really. It sounds like a methodological question. So if we look at the study of debt and credit, we can see a sort of division line between microscopic and macroscopic approaches. So this is one of the themes of the workshop. So there seems to be, like, either you use a macroscopic approach and then you look at global capital flows and you look at big stuff, or you take a microscopic approach and then you talk to people how you took your debt and so on. So, and two approaches apart. So, is there a way of transcending this binary?
So there's that question about, do different scales require different lenses? And that, I mean, it's quite a hard question to think about, but I think not, which is really, it's a strange answer in a lot of ways, and I don't know if this helps. I don't know if I'm getting ahead of myself in doing it. The problem, I was thinking about this when we were talking about domesticating and domesticizing this morning. The problem, if you do say that if you're looking at different levels, and if you're looking at consumer finance or low finance, you need these thick, slow tools, and not the hard, quantitative, sexy tools. Is that you kind of keep reproducing this division, which in lots of ways is just a continual reversioning of the Parsonian Pact, where sociologists get the family and the social and kinship, and economists get the economy. So I think the answer is no. I'm not going to talk about it too long, because I think you also have some.
Well, on the kind of sort of the macro-micro thing, I mean, you've got a kind of family of concepts, right, that are trying to overcome that, haven't you? We've got the kind of knitting concept, there's trail. We've heard about networks and chains. I mean, I used in my research around the everyday life of global finance, I mean, I kind of made two moves, really. One was to invoke this category of everyday life as a way of trying to collapse everything into the mundane and the routine, right? The other was to use, to some degree at least, actor network theory, explicitly because that was a relational concept that was about where, at least to some degree, the focus is precisely upon connections rather than a scalar set of thinking. I remember having a conversation with someone who, that went along the lines of, well, why is your book called Global Finance and Everyday Life? Why is it not called The Everyday Life of Global Finance? Trying to signal that process of, that if you talk about as globalization of everyday life, or indeed the financialization of everyday life, you kind of impute within it some sort of sense of a scalar sense of space that I was precisely trying to get away from. I also recall at the time giving a number of presentations where I ended up with that kind of quote from Bruno Latour about giants and dwarfs. right? So the quote runs something along the lines of the giant in the story is not necessarily a bigger character than the dwarf. And apologies to people that have heard me trot that out on too many occasions before, but that was kind of the sort of way I was trying to think about it, right? That finance had become routine, had become mundane, and we were looking at the wrong end of town, so to speak, to try and understand the transformations that we saw. More recently, in a similar sense, I've gone to another kind of family of relational concepts. So whether that's assemblage, dispositif apparatus, agencement, again a set of relational thinking, but a set of relational thinking that's perhaps less about near and far and relations of proximity, and more that's about relations between the human and the non-human, affect, discourse, materialities, institutions, fragments of policy, to try and think about how action and agency actually takes place.
So, if I can butt in at this point. So the trouble with this, for me, goes directly to those concepts you just mentioned. Agencement, as we Brits like to say, or the French, confusingly, say agencement. At least they do when they're talking to us.
So that you can understand.
Apparatus, assemblage, dispositif. I absolutely buy them. I absolutely buy the work they're trying to do, because it is very hard to kind of define the point at which things end, things stop, relationships stop. You know, that's not the way the world is. The relationship always goes on and on and on and on and on and on and on, right? And it's not like the rest of the world never noticed that before Latour, or before Deleuze and Guattari. It's just that the analysts who did notice it decided that analysis is impossible if you proceed this way, so we have to cut somewhere, right? So I got really interested in the idea that there's always something that we have to cut, and I think that the social studies and finance faces this problem. It's like it defines a very beautiful whole world where nothing is left outside, which Phil Mirowski, who I disagree with about a lot of things, but I think he's right about this, amounts to saying that everything that is part of what makes it what it is, or something like that. His actually makes sense. The way he puts it. He makes the point that it's tautological, that everything's involved in becoming anything. And that's a question of where it leaves you. It allows you to take this inclusive point of view, but when it comes to actually sitting down to do the research, as we all know, you have to cut somewhere. And it's how we deal with the cuts that that worries me. And for me, the answer, a la William James, of how you deal with the cuts is you accept a certain humility as to what we can finally say, which is kind of my problem with quantitative type approaches, that they tend to lack that humility. They tend to feel that the methods, fetishization of the methods, to the point that if the method's true enough, the knowledge is really good, and it's far better than your intuition, your poem, your description. As that KD Headless quote that I started with earlier, it says as much about customer relationship management in a digital world as any academic. I know it's a semi-academic novel and an intervention, but nevertheless, I see inspiration in all sorts of places, and I'm not a methodological purist, I'm a methodological anarchist, I think, or something, a mess. And I will grab and use anything, and I'm not really that apologetic about it either. But what I'm getting at is not that that's the right way to go, but what I'm getting at is that there's always a loss, there's always a mystery, there's always something that you can't get at, and we need to be honest about what that is, and more modest about what we can show.
I'm all for modesty, but I also think that what would worry Mirowski about it, for example, is that all of those concepts flatten social relations, and that what Mirowski wants is a much more hierarchical understanding of how power works. So I'm always conscious that and kind of why I want to talk about myself as a cultural economist and not as someone who does the social studies of finance, is precisely to try and signal that I'm also interested in questions of power. It's just, I don't understand power in the way that Morawski understands it.
Mm-hmm. No, me either.
So, I think, yes, more modesty, more sense of the limits of relational thinking, but also a kind of, to some degree, more ambition, as well as more modesty. If that more ambition is for a kind of way of trying to think about power as productive, as constitutive, and so on.
So what you are basically saying is that different scales don't require different theoretical lenses. It's rather like you can use the same approach to study global financial flows and everyday borrowers. It just
absolutely. Absolutely. I mean, there's been a bit of work around. So Mike Pryke and Paul Duguay, for example, made a really important intervention, special issue in Economy and Society, 2007, that set out what a cultural economy of finance would do. It was about an agenda-setting piece, opening the introductory piece to a special issue. And I agree with the sort of first 12 pages. And then the last two are, but to think about this, then we need to think about politics, we need to become a political economist. No. To think about the big end of town, you don't have to be a political economist at all, I would say. I mean, I can talk about examples if you want me to.
I would like to, but I can't.
Okay.
I am another policewoman here in charge of English Times. So we can take some comments or questions. So how do you deal with this division in your own work, or if you have any questions? Yes?
It's just a comment about this question of humility and modesty of sociologists, which of course I agree with that, but in front of us we are non-modest people, and that's sometimes really annoying to say, well, we have to cut because we're not sure if we go outside of our field, we will come to say to make mistakes of. And then you have people who give you a big picture of what happens in China and in South America and tell you what's going to be the world in 20 years. And I always feel we should fight that, and I don't know how, because of course when we're together we have to be modest and we know our limits, but outside maybe we should also think about having something to say in front of us.
I think that's a really, really important point, and I think it's partly what Morawski's beef is that, well, I shouldn't try to represent his argument, but you're absolutely right. Economists don't suffer from this modesty issue. And I'm definitely not saying that sociologists should be modest. I think we should all be modest about what it is that you can do. And if Chakrabarty had a point, it was that economists should have been chastened, and he thought that for 5 minutes they were. And in that 5 minutes that the economists were chastened, the political economists and the sociologists and the anthropologists should have rushed into the field. I don't know if they didn't rush because they were too busy being modest. But what I really mean is a question of accepting that there are always trade-offs no matter what you're doing. There are always trade-offs, there are always things that you're going to get at the very best explanation that you can get of within the constraints in which you operate. Whether you're a macroeconomist or an anthropologist studying the shopping behaviour of one family, there are always things that are going to escape. That is the nature of knowledge.
Yes? Marika?
I have a question for Paul, because I really like the idea of having a sort of a relational approach, but really not leaving power out of the picture. But then it's a question, how do you do that? And I would agree with Liz that political economists, such as me maybe, sort of do somehow assume a certain power relation, do the research, trace everything, show the relations that are relevant, and then end up with maybe a similar assumption than we started with.
Well, the theories of power for me are not Murawski or Marx. So, I would use coding ideas, Deleuzian ideas around power as a heuristic, but I would want to be very attentive to being cautious of some of the traps that come with that. Perhaps in some earlier work, for example, I would say that I took Foucauldian kind of modes of power in a kind of epochal sense. So that there was a sovereign moment, there was a disciplinary moment, and there was a governmentalised biopolitical moment. But to some degree, I was forced to critically question that in my own mind, and to try and think about, actually, no, that's not what that thinking in terms of modalities of power isn't about that at all. It's about recognising the way in which they overlap and intersect, right? So, if the financial crisis taught me anything in terms of my thinking about power, it was the need to think that the constant ways in which sovereign power is reinvented and repurposed and retooled, whether that was in unconventional monetary policy or whether that was in post kind of crisis regulatory fixes, the way in which central banks attempt to kind of modulate the circulations of money and finance changed fundamentally in the crisis as they moved away from kind of just a reliance on monetary policy to a kind of a more anticipatory toolkit that is constantly labelled as being unconventional. If I'm thinking about power in those kind of epochal terms, I miss all of that. So I would say choose your theorists of power carefully, but also don't read them uncritically.
It's actually my next question refers to that. So if you look at these different theoretical lenses, not so much as micro and macro, but along a different division. So there seems to be theories that are concerned with power and explicitly concerned with power, and approaches that are concerned with practices and how actually markets are put together and they are made to happen. So, for example, actor network theory, even though Latour has dedicated an entire chapter to power in his reassembling the social, is constantly being criticized for ignoring power, because it's not, explicitly talks about it with a capital P. On the other hand, like Marxist and even Foucauldian approaches sometimes are criticized for ignoring the material details, okay, we have this course, and, where is it, how does it work, what does it do? I think both critics are not really justified, because Foucault is also concerned with practices. Nevertheless, we have this, debate going on. So what do you think? Is there a trade-off between focusing on the analysis of material practices versus power?
I would tend to think there is. And I don't know if I've ever used the word power, which is something that Paul has corrected me for, or picked me up on at least, a number of times in the past. When he's generously read drafts and said, yeah, but what about power? And it's true, I don't talk about power. I do talk about material practices, and I do talk about power with a very tiny p that you can't see, because I think what I want to do is to try and look at the bits that are not glamorised in academic discourse, that are not often part of the conversation. So there's this phrase that I trot out all the time, which is the silence of the poor. And this has got to do with the fact that I got frustrated reading the historical literature and reading the debates over 150 years about what do we do for the poor? What are we going to do about the poor? How are we going to help the poor? The points that various people have shown today about financial literacy, they are still the same as they have always been. How do we make the poor more competent and less stupid and less feckless? And the one thing that almost no one ever does is actually try figuring out what it is that they think they're doing. The kind of work that's been happening here, the situated, creative rationalities, what is it you think you're doing when you do that? Why are you doing that? Who's listening? And it's still the same, and if you are interested in this, and in Wonga in particular, the payday lender, it's absolutely fascinating that this is still the case. This is still the case. We are much more interested, someone said earlier today about the polarization, that we like polarization and duality. We're much more interested in the remorseless dialectics of blame and praise than we are in finding out about those who we do not hear about by actually, listening to them and asking questions and being there and letting those voices be in the conversation. So in that sense, the work that I'm interested in doing is about saying, well, the people who are voiceless, can we try and figure out what it was they were saying? I was talking about dead voiceless people in the book that I used that phrase on, which is not mine, it's Charles Masterman, one of the architects of the first version of the welfare state in Britain, used this phrase, the poor are always silent. I think they still are, and you can't find out what it is they said because it's not recorded anywhere, so we're trying to kind of ventriloquize them by finding bits and pieces of rubbish that refer to what it was that they were doing in markets. Because, and this is my controversial argument, markets, more than politics, are quite ecumenical. They don't really care. They don't work as hierarchically. If they think they can make money out of poor, which a number of papers today have said, they will listen. They will figure out how to listen. That doesn't make them great, but I think there's something politically to be learned from the fact that what are markets doing to listen to the poor, that those well-intentioned political actors and states and policymakers and reformers are not doing.
Well, that's your point.
Okay, well, I think, is there a trade-off between thinking in terms of material practices versus power? I think there's a trade-off in what kind of social science you do, where you go looking. So yeah, I kind of would agree with a lot of what you just said in that sense. But for me, that's not what that trade-off's about. I'm kind of one of those people that wants to have their cake and eat it, so I want to do both. I guess probably the material practices that I tend to look at tend not to be the material practices of those equal to poor. I might look at the material practices, say for example, of a crowdfunding platform. So I want to know how a crowdfunding platform uses credit scoring and due diligence devices in ways that are different from how a bank or a credit card company or a subprime lender might engage in those material practices. At the same time as being hopefully attentive to the way in which entrepreneurialism is celebrated in government initiatives that are about trying to power forward the crowdfunding sector. So I want to kind of try and hold together those material practices with a kind of more explicit concern of power. Where we probably differ is in whose material practices, which I think is a somewhat different question.
It is just a comment, clarification question. So when you talk about the silence of the poor, it really reminds me of the introduction of the Walter's on justification, because they start by saying that you can't really do a critical sociology if you don't pay attention to the critical operations of people. So you have to start from there. But there at the end of the day, there is a sort of underlying political agenda that you need to get these voices heard. which is, I mean, it's absolutely fine. I'm not saying that there shouldn't, I think there should be a political agenda, but I'm saying is rather that there is a political agenda even behind this idea that voices need to be heard. So I'm wondering what's your...
Well, you know, Jose Sandin put me on the spot about this in an interview last year, and I can't pretend that I have got, you know, an authoritative response to this, because it is, you know, it is a difficult question. One of the things he was trying to say was he was talking about the differences between, say, my empirical case and the operation of neoliberal politics in Chile, and he was taking me to task on this argument that markets listen better.
Markets tell better?
No, I think they listen better because if you're a market actor and you don't listen to what your customers are doing, they don't come back. One thing Provident is about reserving the customer. That's how they put it. You know, so they can't. You know, if you're a policymaker or a legislator, and this is what Bill Maurer calls ethnography is retrospective regulation, or is it the other way around? Regulation is retrospective ethnography, right? So policymakers are always legislating for the past problem. The problem is in the past. Markets don't give a monkeys about the past. And by markets, I'm talking about if you're like a consumer financial services organisation. You know, Tesco in the UK famously accumulate all this data, but they don't care about the historical data. They only care about what customers are going to do next. And this different lens means that markets have to devise techniques for listening in and gathering as much as they can about what do people like? What do people who like this like? Do they like that as well? I'm not suggesting they're doing anything political or empowering or good for the world in that operation, but they nevertheless are doing something in terms of finding out about this constituency. With policymakers who are trying to improve the lives of that constituency without finding out about that constituency or importing some sort of idea which often goes along the lines of, well, the poor just aren't really rational enough, or they haven't got the capability or the competence or the literacy to make the right decisions. And if they just could make the right decisions, they would find their conditions improved. This debate is at least 400 years old, not older. And a lot of it does come from not, you know, markets don't make judgments about whether or not the poor are behaving badly. They're just making judgments about whether or not they'll buy this or that. You know, policymakers could do with learning something if they want people to kind of behave in a way that's in their better interests. They could do with figuring out a bit more about why those contextualized, situated rationalities are being exercised in the way that they are. I'm not sure that I really answered the question, but yeah.
Thank you. Comments from the audience. Do you see this trade-off between power and material practices? Yes.
I wanted to respond, because it doesn't matter that the markets in this case don't care about the subjects. They're not. If you've ever responded to a lender, you know you're not. You just gotta. You know, there's a specific code that you have to follow, because you know you're not talking to a person and you're not talking on behalf of a person. You're talking on behalf of a characteristic, and you're speaking to a machine. And from the point of view of Provident, they've got a set of characteristics, not subjects. You need to be predictably divergent about this, and they've got a set of attributes that they're applying their actions on.
You're a individual, not an individual.
Individual, yeah. And surely that's an important. It's not necessarily they're listening to people; they're listening to.
Well, there's data doubles. They're listening to the little traces that they fabricate into a person for their own purposes. The little attributes, the clusters of what you did in the past, what they might know about you now, where you live, what bank account you have, what your credit rating is. We're putting all these things together and clustering it into an offer that can go to you, right? So I'm not saying, I'm making no judgment about whether that's good, bad, or indifferent. In this, what I am saying is that it's more than policymakers often bother with. Which sounds really bad in the sense of attacking policymakers who are trying to achieve a normative goal that's to improve the conditions of people who could really do with their conditions being improved. But it just seems astonishing to me that it is still done in this very paternalistic, detached, we know better influenced by a certain view about economic rationality way. Reading the transcripts of the attempt to regulate Wonga makes that very clear. That is still, they don't actually, and your point, Paul, about material practices of which actor, I actually have looked at the material practices of the financial services providers because my consumers are all dead in this market, so I can't look at their material practices. Forget the committee's name for the moment, but what they don't do is they didn't actually look at Wonga's business model, because they already, this is the political economy point, they already knew that Wonga were bad, therefore they knew that Wonga were making money out of this insane interest rate, which started off being 4,814% and got higher, APR. So they already knew, that was enough information. They already knew that Wonga were bad. They thought that insane interest rate was how Wonga were making money. But it wasn't. Wonga were making money from repeat custom. Now, if you're making money from repeat custom and you're modelling the consumer as just being sort of really beaten up and manipulated by this payday lender, how do you explain repeat custom? So whether you go into the, I think you need both actually. I think you need the provider and the consumer's voices to be heard in any kind of legislative process that's about saying, ooh, we don't want this. I'm not trying to say Wonga aren't helpful for putting people into poverty or keeping people in poverty. But I am saying you need to kind of take seriously the empirical details of what's actually going on in that transaction before you try to improve it. Which kind of seems a bit obvious to me.
Thank you. So now we arrived at the last question, which is also inspired by the call for paper. So in the call for paper, we say that most of the empirical work and the theories of credit and debt are based on Western context. So my last question is, what do we gain from this studying non-Western context? And just a brief illustration of like the matter here, that when we present our research on the Hungarian mortgage market at conferences, usually we tend to get two types of reactions. One is that our argument doesn't apply to Ireland and to the US, so if it can't explain why the mortgage crisis happened there, then obviously it's not a good theory. So there is this idea of, you have to develop general theories wherever you are, or it's treated like an exotic, little interesting thing, that doesn't really have any theoretical relevance because it's just, some interesting stuff out there. So my question is, what's your take on this? So what's the value of comparativism beyond, showing difference?
Yeah, I'm kind of probably the least well-placed person to address this question as someone who's spent well over a decade just looking at US and UK finance and not venturing out too far from there. What I would say though is I think at least two things, possibly a third. The first is that I think there is really important comparative work that shows precisely the significance of thinking with and through difference. Part of the problem with that is it comes up against precisely the kind of responses that you find yourself getting in conferences with, oh, that's fantastic, great, but it shows difference. So we kind of then, therefore, need more, right? So the second point would be that for I think there's also a sense in which we need to rethink what comparativism is all about. In that, when we particularly in political economy, but also to some degree in other literatures, when we talk about comparativism, we necessarily slide into comparing national systems, right? So the varieties of capitalism literature would be the kind of exemplar that I've got in mind here. But the varieties of capitalism and all those other kind of national comparative literatures, they have kind of territorial assumptions written in, right? So John Agnew, very first issue of Review of International Political Economy, Volume 1, Number 1, 1994, article about territorial assumptions, right? So those approaches to comparativism have territorial assumptions. But we're now trying to use relational concepts, right? Relational concepts that don't assume that space is territorially organised at all, right? So we use concepts like, trails, knitting, right? Networks, chains. They're concepts that are not territorial concepts. So we've got a disjunction between a comparative method that makes territorial assumptions and a set of concepts that are precisely about trying to work against and think about proximities of near and far and so on in ways that are not about territoriality. So I think, whilst I see great value in comparativism in that sense, I think we need to be very careful that we don't then slide back into a set of territorial assumptions about how the world is organised, which the paper that was immediately before ours about Central and East European mortgage markets shows precisely the problems of thinking about territorially. Those networks, those chains, whatever we call them, were not territorially organised. Right? So kind of comparativism, yes, but some kind of essence of a rethinking of comparativism. And the final thing I would say is that this is not a problem that is this kind of need to rethink comparativism is not a problem that we would be grappling with alone. There's some really great literature in urban studies that's interested in comparative urban theory, right? So the problems of comparing, for example, cities of the global north with cities of the global south, right, without bringing back precisely those kind of assumptions of dependence and so on that would tend to come with categories like global north and global south. So within that urban comparativism literature, there is a post-colonial term. Right? So maybe we should be interested in South-South relations. Maybe we should be interested in post-colonial theory in order to genuinely do a comparative method that works with rather than against concepts like relationality.
This is not a great answer, but it's an extrapolation, because like Paul, I'm not particularly well qualified to speak to this. We have an even more parochial research scope than he has. But I think I want to return to this point about listening. Because I want to do two things. One is to throw it back to you guys, because I've heard more today about what a different perspective means, and what it is more than just about saying, oh well, it's different. Aren't things different everywhere? It's about more than that. But I'm also really, really uneasy about these terms like global south, core, periphery, post-socialist, post-colonial. And one of the reasons I'm nervous about it is kind of in a tangential way related to the craft beer point, which is that when that vocabulary changes so much, and when the other looks so disenfranchised and so other, so different, so other, that the people who have voices get terrified of speaking about it, therefore they don't speak about it at all, is something we have to resist. And the only way I think to resist that is to kind of listen. And I'm a Scot, and I have the geographical accident of being in an international language, which means I speak no other languages but English, but I do try to see that I'm already speaking a second language when I speak English, since Scots is rather different. But that's an advantage that Anglo-American academic culture has, that it has the capacity to speak and be heard everywhere, and you lot have to kind of, by which I mean the non-first language English speakers, have to try and kind of work out how to speak to that. I'm old enough to remember a time when it wasn't going to turn out that way, but it did turn out that way. So for me the answer is not so much about what you learn from other places, is shut up and listen to other places and find ways of making those other places part of the international conversation. And a quick plug for the Journal of Cultural Economy, which is very much part of its agenda, is to try and kind of create a space where it's not just particular disciplinary power bases that get into print and get to speak.
Yes.
Yeah, it reminds me of work done on things like the transnational capitalist class and stuff like this that points out that you can have more commonalities between a social class from different places in the world than between people in the same country. So looking at Western versus non-Western or any variation on the theme makes no sense because difference isn't distributed in that way. It's not distributed territorially, it's distributed in all kinds of different ways. You could take a street in a major city like London and you could find all kinds of differences in there. So why fetishize that kind of colonial imagination?
Other comments? Yes, Susie?
I just wanted to propose like what I was trying to argue in the presentation as well, but I think it's not, I think it can't be argued in such a like horizontal way, just to say that it's it's different everywhere, or relational everywhere, not territorially. I think I have a more, structuralist approach than this kind of very horizontal and very, just saying that these differences are just questions of relationalities. I think there is actually this element of what Liz was saying about how certain positions get to speak more and get to define theoretical perspectives more. I think that's something that is very important and that cannot just be bypassed by saying that we should open spaces where everyone can have the same capacity to talk. And theoretically speaking, I think that it does contribute theoretically to consider non-Western context, and maybe non-Western is not the good term for it, but maybe non-dominant or non-core or non-Anglo-American, or I don't know, we can find what the appropriate term for that is, but I think it does contribute theoretically to look at other contexts, not just because it is different and it's something that we don't know yet, but because it is constitutive to how the whole system is then established and to how it functions actually.
Yes.
I think it's also an empirical issue. So, for instance, mortgages in Central and Eastern Europe, a big part of their dynamic is precisely differences between territorial jurisdictions that are there and that financial actors exploited in a way. So even in mainstream finance literature, you can read about stuff like carry trade. So this exists. I don't think we should simply ignore it.
No, I wouldn't suggest for a minute that you should ignore territory or indeed sovereign power, the capacity of the sovereign to decide, what goes on in the markets within territorial space. But I also think that there's a danger with starting from the assumption that, the world is divided into territorial units. Ontologically, we should start from there. No, let's think about territory as a dynamic, right? As territorialization, for example, right?
Or as linkages.
As a constant struggle to territorialize and deterritorialize, maybe.
But even if we talk about wealth chains, they are structured actually also by differences between jurisdictions to some extent.
Yeah, absolutely.
So,
absolutely, yeah.
Yeah, I'm quite sympathetic to your approach, especially the analytics behind it, and repoliticizing finance, trying to domesticate it in certain ways and look at it from different perspectives. But there's always the argument to be made that there are hegemonic discourses out there, and they dominate for a particular reason. So looking for difference for the sake of difference, or heterogeneity for the sake of heterogeneity because it's great or it's some kind of value added. I'm kind of wondering if you mention what Liz mentioned, and that markets prize ergodicity, the whole notion that the future can repeat itself at intervals into distant horizon, we can sort of plot those and exploit those for profit, and that people are risk averse quite often. I'm wondering, with the crowdfunding, and just using that example, I guess in particular, will these things eventually start to concentrate? Will hegemonic discourses and narratives start to form that make it look like these practices dictate they will, if we believe the performativity literature? how these things happen, can we preempt them from happening, or is it just inevitable? And maybe we're just trying to look at an analytical exercise that really in practice has no real anchor.
I think I understand your question in the sense that probably the easiest way to answer it would be to invoke someone like J.K. Gibson Graham. Anyone here ever come across Gibson Graham's work? Okay, so it's two women writing as one man. That's how they describe themselves. And their key critical intervention was to say that concepts such as hegemonic discourse or ideology or whatever are working with what they would call capitalocentrism. Okay? If we start from there, we see the world as being one dominated by capital, etc., etc. And the point that they were trying to make was actually that the economy is much more diverse than that. And they famously had this iceberg model, right? So the bit above the waterline is the bit of the economy that we usually see, right? So that could be the markets as we usually understand them, that could be the production process as we usually understand it, might be market transactions as we usually understand it, consumption as we usually understand it, and so on. But actually, beneath the waterline is where you really find the economy. Right? The kind of economies of social reproduction, economies of gift, economies of family, economies of theft, right? Let's not glorify the informal economy. There's theft, there's black market, right? There's slavery, etc. That's all there too. It's all below the waterline. And I think if we start with capital and we start with hegemonic discourse, then we're only looking above the waterline.
Thank you very much. Please.
Oh no, I just wanted to say one thing, a couple of credits. That's actually from Lauren Tucker's interview with Bill Maurer, that quote.
And actually, I should tweet his, I think, 53 copies. It just reminded me that I've been doing that ages ago. So.
And yeah, I forgot to say thank you at the start, because it was a real privilege to be here.
Thank you for accepting the invitation. Thank to both of you and also to the participants for coming here this evening. And I apologize again for the half an hour delay.
It was a lovely lunch. It was a lovely lunch.
So thank you very much.